Okay, we're back with another market open live stream. Alright, so we are back with another market open live stream. One of the main reasons we didn't go live at 1:30 today is because I have no intention of taking any trades today. And I just want to talk about Alright, so yeah, I'm back with another market open live stream. One of the main reasons we are why did I press that? One of the main reasons we did not go live at 1:30 is because today I have no intention of placing any trades. I'm gonna tell you exactly why that is in a moment. So you see, on days like this, in anticipation of a major news event, it's extremely important not to trade. And the reason that is because the markets are going to be choppy. I could be wrong. There is a chance that the markets aren't choppy today. However, my belief is we're just going to manipulate. Price is just going to be trading terribly as we anticipate the news of CPI. The market's also anticipating the government reopening, and so for that reason there is a chance that the market just continues to chop around in anticipation of the government shutdown. And so for that reason I'm not going to be trading today. However, we will keep our eye on price action, and we will do a pre-market analysis. And obviously the market has already opened, and so it's a bit pointless to do the analysis, but we'll still carry on, and I'm going to show you why the market's a bit it's likely to be a bit unpredictable today. And so if you take a look, we had a close slightly above this fair value gap that occurred on the 3rd of November. And so because of how thin the fair value gap is, slightly that price is just going to reject and come back down and just manipulate price higher and lower. My belief was that we was going to actually trade inside this range, and there's a chance that we do continue to just trade in and out of this range, probably sweeping liquidity to the upside, then to the downside, into the upside, into the downside. But my belief is we do not make any meaningful movements in price until after the news event. However, let's start off with our pre-market analysis, and we'll copy and paste this over so we know exactly what's going on. And so we're still going to hold this as a downtrend, simply because what we'll do we'll identify this as, we'll take a look at, so if we take a look, it opened at 349 and this closed at 52, which is about 3 points. Let's see if that's the same over here. So on here, this opened at 379 and this one closed at 386, and so it's bullish on both of them. And so based on that, we'll stick this as bullish for now. However, we'll put a question mark here, and if we are bullish, then we're going to have targets of the external highs, which, if we're not mistaken, external highs it's going to be this level right here. And then if we have external highs up there, we know external liquidity has not been taken, And so we'll put no here for now, and we'll remove this as that's not going to be valid, and then we'll remove this. We're in a trending market environment. Let's see if we have any important levels. As of now, we don't have any important levels. The only fair value gap we would have had would have been this level right here. However, it seems like this level did manage to hold, and so this is a decent level to keep an eye on. And so we've got this fair value gap here. If we keep on going, identify important levels of liquidity, and because we've now shifted into an uptrend, we should be looking out for the London session lows, which is down here. And so we need to see price come back down to this level, which is what we are slowly starting to see. Let's see if we've got a previous day's low as well. Previous day's low would be all the way down here, which is going to be no good to us. So we've got session lows with the idea that we are in an uptrend. Okay, so if we take a look at the hourly and the 4-hour chart quickly, we want to see if they're in confluence. We are in an uptrend in the hourly chart. We've just shifted here, and on the 4-hour chart we are also in an uptrend, and so we could say hourly and 4-hour chart is in confluence with the uptrend. And so if we was going to look for a trade today, we would need to get positioned here. And so because I'm not looking for a trade today, I have no expectations. However, if you did want to get long into the market, it would be here, with targets at our external highs. That would be the way up here. And so that would be the trade idea. However, if we take a look at the map, the calendar, we've got CPI on Thursday and PPI on Friday, and so there's a chance that we just don't trade this week. There's a chance we just see the week off, and especially if the government does reopen in the US, it could potentially just defeat the purpose for a somewhat bullish market. The crypto market seems to be down. I'm expecting the markets to be choppy all throughout this week, and that's the reason why I'm not looking to trade.
CNBC contributor, FundStrat's Tom Lee. It's good to have you. Welcome back.
Yeah, thanks, Scott. Good to see you.
So the market obviously assumes that this is all going to happen. The government's going to reopen, and we're just going to get back on our merry way in the stock market. That's certainly what the trade says today. Am I right?
Yeah, I think there's a certain measure of relief because the shutdown robbed us of visibility on the macro data, and of course, there's economic hit, and they're suffering because air traffic is slowing. So I think for many reasons, I think this shutdown was a problem for investors.
So what about now between, now and the end of the year? It's the AI trade that really seems to be debated. How do you feel about it heading into this final stretch?
I think it's still in really good shape fundamentally. We know there's a lot of visibility for AI spending, and we know there's still innovation and gain of function taking place with the models. So to me, it makes sense that there's still a payoff coming. I think one of the issues that investors are going to grapple with is even though they may say AI stocks are expensive, NVIDIA still only trades at 29 times forward earnings. I mean, it's still cheaper than Costco, so it's hardly a bubble valuation.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about NVIDIA. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story's incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich. Using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N equals one company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
But what was last week about then, do you think, at its heart?
Well, I think at the heart is the market wobbles. And so when the market wobbles, two things. One is they start to take shots at the leaders, right? Because they try to take down the leaders thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Don't you have any concern at all about the level of money that these companies are spending on their build out, and now the new wrinkle of tapping the debt market rather substantially to help do it?
I mean, Scott, yes and no. I mean, AI is proving to be a scale game. It's not like you and I could start a garage and make a model competitive with OpenAI. We need to have scale and a lot of chips. That's really the model that was required for telecom infrastructure and for energy infrastructure, and of course for internet infrastructure and even fiber. So it makes sense that a handful of players are really playing a big role. And just like in the energy system, there's 8 majors. Everybody spends money on the 8 majors, and the 8 majors pay a smaller ecosystem. So I think it makes sense that that's what's developing in the U.S., and of course it's leaving other countries in the dust.